All right, so futures are lower, down week on Wall Street. What's your word of the day? How do you see this last trading day of the week shaping up?
Yeah, the word of the day is choppy. And I think we see that in the data that you've been laying out through the show. And what we think we need to bear in mind is that choppy just means you need to pay attention, right? It's not inherently bad. It just means there's movement and you've got to navigate carefully. So I think choppy is the apt word. And I think it really represents these markets in which, you see the market is building in a lot of apprehension. There's a lot of signals. And I think, some of your earlier guests pointed to that too. We want an economy that's strong and resilient, and we are seeing that in a lot of the consumer data, which is great. But we don't want to have it to be too hot. We don't want to reaccelerate inflation, and you certainly don't want to get into territory where you see rates being hiked, which is not our anticipation. Okay. But I think all of those things are what you're seeing right now.
All right, so you got to navigate this market. You think it's a little bit choppy. How do you navigate bond yields at pretty much 4.7% right now? Long bond at almost 5%. Julian Emanuel from Evercore said the rise in rates on the long end of the curve is the biggest threat to the bull market. Do you agree with that? And if so, how do you navigate this higher rate environment?
Yeah, listen, and by the way, we don't think that the rate environment is necessarily going to change anytime soon. So I think that that's a fair point for sure. I think, again, it comes to navigation and to selectivity, right? So I think that if you look at the equities markets and you look at stocks, I think you really try to identify names that are leading through innovation, that are disruptive, and that are really predicating their innovation in particular on bigger trends that they're seeing, whether they're a demographic or otherwise. They're really responding to an unmet need or to bigger forces that are driving forth, category growth or even the emergence of new categories, for example.
So, Lisa, you're leading me in this direction, so we might as well just go there. What's your pick today and why?
Yeah, we picked Freshpet. I think it's a really interesting name. One, it's not in the large cap territory. And so I think that's even just interesting in itself to talk about, because I do think that there's an opportunity this year for investors to take a fresh look at names that perhaps aren't being talked about every day. And as I say, Freshpet, which is a name that is really disrupting by providing fresh dog food and is really available through special packaging, special technology. It's got a competitive moat around it in that way. It's responding to the fact that consumers are spending an increased amount on pets. Pets are something they're putting more resources to. And I think it ties with an overall trend in which, kids are less a focus for a huge portion of the population. We're now pushing nearly 50% of the population in the U.S. of people adults under 50 who are saying they don't expect to have kids, but they are investing in their pets. And so I think it's an interesting area. And I think these are the kinds of, solid operating models, but with really exciting growth ahead that we would like folks to be looking to.
That was such a surprising stat. You gave us almost half of people under 50 don't ever expect to have kids. That's a big shift here in the United States from just a couple of decades ago. Yeah, nearly 50%.
I know, it's 47%, and that's up from 37% only in 2018. Wow. It's a very, very pronounced trend.
Okay. I do have to ask you one thing about Freshpet. I saw the move on the chart there, obviously a lot of growth over the last year. What about the valuation? According to our system, trades at about 117 times forward earnings. I mean, that's a very lofty valuation.
Yeah, it's grown a lot, and you expect that, in that profile of company, disruptive innovator. But we say that it's 25 times EV to EBITDA on our 2027 EBITDA. We think it's going to grow another 25% this year. And I also think too that just structurally with these innovative type names that are much smaller and in an environment, by the way, that is just generally more conducive to M&A. I think you also have to look at historical, premia in that space too, and be thinking about what big consolidators might be looking at. So for a lot of reasons, because of their organic growth, and then I think some of the structural setup, we think the valuation is merited.
Yeah, I'm a pet owner. My dog loves this stuff. I actually did a story with them a couple years ago on Squawk Box. I tried some. It's terrible for humans. One last question for you.
As a person, you tried it? Oh, yeah, that's not what we're recommending.
Awful. One last question for you. Expectations for the jobs report and the market reaction after, if we hit the estimates or it's even a little bit hotter. We did have some upward revisions from some previous reports. What are you expecting today as far as the market reaction?
and we're actually a little on top of consensus there. Listen, I think that the market is hopefully not going to be a very, very quick reacting market today. As I say, choppy, and I do think people are going to be looking to navigate it. But we are expecting a pause on rates as well. I think as you say, that's become the consensus. It's such a weird week in this market, right? Because it's been a short week with equities closed yesterday. So, I don't expect it to be a great day in trading, but I don't, certainly expect to reach levels that we're not going to be able to come back from by any means.
Interesting point. I don't think we've had a full week of trading in about a month. So that's a kind of an outlier.
Yeah, and I do think that's part of what's going on here
Lisa,
too, by the way.